the question is, should we be holding gold or silver? Which metal? Which metal do we want to have? We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome everybody to Talking Trades. Kevin Wadsworth and myself, Patrick Karim. And today, Kevin will talk to you about metals. I know everybody's interested. He's going to cover the metals for you. Guys, not heavy metal like the music, the rock bands, but real metals, guys, precious metals and so forth. So please, Kevin.
Okay, well, if we were talking about heavy metal rock bands, I think the discussion will be very short, Pat. Okay, well, let's talk about gold and silver to begin with, shall we? Because I think as far as precious metals are concerned, those are the two that are usually talked about the most. And the chart that I'm showing you here is a chart that I've put together, the gold-silver ratio decision aid. Okay, so my background being in meteorology, we would produce something called decision aids for the military. And decision aid is basically a tool that turns a weather forecast, which everybody knows and loves, into something that the military can use. In other words, they would want to know, for example, can they carry out a low-level sortie in a particular part of the country? Well, they don't really want a nice fancy weather forecast. They just want a decision aid, yes or no. Can the mission go ahead? And we would often use a technique that takes the scientific data and turns it into either a green, an amber, or a red coloration. Green for go, red for no go, amber for, well, possibly, but there are some issues. Okay, so this is the gold-silver ratio decision aid, and we've identified a rising wedge pattern over the last couple of decades, last 25 years or so, in fact. And these rising wedge patterns usually, not always, but usually eventually break to the downside. But that's not particularly important at the moment. What is important is identifying the fact that the gold-silver ratio has really over the last 25 years overall just moved gradually upwards. Okay, so if you were holding one metal rather than the other for the entire sort of last 20 years, you'd be better holding gold because the ratio's gone up. And when this ratio goes up, it means that gold is outperforming silver. When the ratio drops, it means that silver is outperforming gold. So the question is, should we be holding gold or silver? Which metal? Which metal do we want to have? If we've got a portfolio with gold and silver in it, held digitally, for example, you can quickly swap between the two. And over the last few months, the one to hold has been gold. Gold has outperformed silver. The decision aid is now moving into the orange zone, and the orange zone, once you're in it, is favouring gold, and the red zone, once you're in it, favours gold very significantly. It's not really until you start passing down through the little yellow quadrant there and down to the green zone that you would definitely want to be sort of swapping over to silver for a longer period of time. Now, there are movements up and down over sort of days and weeks. That's kind of, in terms of the big picture, it's sort of noise, really. We're looking here at the big trends if you're positioning for a period of time during this bull market. So at the moment, the gold-silver ratio decision aid is suggesting that gold is most likely to slightly outperform silver. Now, if we factor in something that we've mentioned previously, and that's recessions, and we're aware of the fact that the likelihood of a recession is increasing at the moment for a number of reasons, then it's important to note that very often during recessions, the GSR, the gold-silver ratio, spikes to the upside. It's sort of one of the fairly common factors of the initial stages of a recession, or something that can very often happen during a recession. So gold, and the reason for that, stock markets dropping, liquidity, all that kind of thing. If something is going to sell off more than, out of the two metals, if one of them is going to sell off the most, it's more likely to be silver. It's more volatile. Gold tends to hold its value more during a drawdown, and that would potentially send the gold-silver ratio up even further. Another thing to factor into the equation, particularly with gold and silver, is the fact that silver itself is what we call a recovery metal. Okay, so when do we want to be holding silver? And in simple terms, if you look at this chart here, so this is the silver to gold ratio. Okay. And what you notice is that when the stock market drops by 20, 30, 40, or 50%, or even more, silver to gold ratio spikes upwards after the stock market has hit its bear market lows. So stock market drops a huge amount, hits its bear market lows, silver to gold ratio spikes. Stock market drops, hits the bear market lows, ratio spikes. SPX drops, hits its bear market lows, ratio spikes. Same again here. So when it comes to a question of which metal, gold or silver, there's a number of pieces of evidence that we need to bring together. And effectively what it's saying at the moment is that the time for silver to really outperform gold is not here yet. It does not mean that silver isn't going to go up. Silver could very well go up to $35, $40, $45, even $50. But for it to be outperforming gold, the stock market needs to plunge, needs to hit its bear market bottom, and then you get that big period of outperformance. There are shorter periods where the silver outperforms gold for a few days or a couple of weeks or whatever. Yes, that does happen. But I'm talking about the big trending moves here. So silver, whatever value it goes up to, ahead of and during the stock market crash, the time it will be outperforming gold comes after the stock market has hit its bear market lows. That's important to factor in and to bear in mind. Something else as well. So people talk about platinum. We can use the same technique for platinum. You can see this is the platinum chart. It's a cup pattern. We had a cup that formed back in the 1990s, and we've got another one that's forming at the moment. And platinum could very easily move up towards $2,000. But does that mean we should be investing in platinum? Well, look at the platinum to gold ratio. When this ratio goes down, platinum is underperforming gold. Okay. And boy, has that ratio gone down. It has plunged, and then it plunged again, then it plunged again, then it plunged again, and then it plunged again. We can use technical analysis to tell us exactly when we should be bullish on platinum. When it gets above horizontal resistance lines, when it gets above declining resistance lines, when the ratio gets above the 4-year moving average, and when it gets above the Ichimoku cloud. That's all of the technical evidence pieces of the puzzle that you need for platinum to then go on into a bull market versus gold. And it may do that at some point in the future. But for the time being, every time you think platinum has reached a low versus gold, it just plunges lower. And you could say it's historically undervalued, platinum, over and over again. It's historically undervalued versus gold, and then it's even more undervalued versus gold, even more historically undervalued, even more historically undervalued. You know, I've heard people saying over and over again over the last couple of years, you know, platinum is massively historically undervalued. Buy platinum. No, don't buy platinum. Buy gold until the ratio breaks out. So when it comes to which metal, Pat, it is crucially important to use this technical chart evidence.
Well done. You broke some hearts, those platinum aficionados. A little heartbreak there, guys, but that's the reality of the thing. No bueno until it starts trending upwards against gold. Guys, thank you for watching. Please subscribe, like, and get more content like this.